If you want to invest your money into the stock market, you will need a broker first. And I remember when I was first starting to invest my money about 10 years ago, picking the first broker was kind of a big deal for me. I have had several brokers since then, and in this video I'll talk about how I pick them. Now, I will not talk about specific brokers for several reasons. One is that the brokers that you can choose from differ from country to country. Also, in our fast developing fintech world, there are new brokers popping up every few months. And another reason is that one criterion might be more important for you than it might be for others. So instead, I want to give you the tools to do your own research. And that toolbox allows you to make a personalized decision and to pick the best broker for you and your needs. I think there are 4 criteria especially important in the beginning, and those are the type of broker, access, cost, and availability. So let's dive in. Now, the first thing you should look at is the type of broker. The 2 main categories here are a full-service broker and a discount broker. Both of them you can find either online or at a specific location, for example, somewhere in your city. Also, both of them will allow you to trade stocks and bonds and other financial products at the stock market. Now, the full-service brokers usually offer more than just buying and selling the stock. Now, they have additional offers like investment advice, a detailed performance analysis, or also tax advice. But because they offer all those individual things, they're quite expensive. That is why I always went with a discount broker. They do have a limited service, but they allow you to just do your own thing by buying and selling if that's what you want. And at the same time, they're very cheap. So when you're just starting out, you're looking for a simple investment strategy and your net worth is less than $1 million, I think the online discount broker is the way to go. The next point is access. So if you do insist on being able to go somewhere and talk to some real people, you can try to find a broker near you. I don't recommend it because it will be more expensive. It limits your choices because there will not be 10 to 20 different brokers in your area. And I think it also adds friction because you have to make an appointment, then you have to go there, and that all takes a lot of time. So I personally have stuck to online brokers from the start because that gives you quick access wherever you are and whenever you want. Within the online broker world, I guess there are 2 different options. The ones that have a website and maybe also an additional app, and the ones that only have an app. So if it's important to you to be able to do that from your laptop, choose one that has a website too. If it's also okay for you to just do it from your phone all the time, then you can go for the app version. That's what I did for some of them, because when I started out my career as working as a doctor, I was working long hours from morning till late afternoon or sometimes evening, from Monday to Friday, which is also the time where all the stock markets are open. So for me, it was convenient that I could just take out my phone in a break and do some tradings if I wanted to. Didn't use it often though, because I have my automatic monthly investments, and of course there were other ways around it, for example by placing a specific kind of order. Theoretically, you also can buy and sell stocks on the weekend or at night. I don't recommend it because it will not give you the optimal price. By the way, the best time to trade in Europe is between 15:30 and 17:30 because at that time frame all the important stock markets are open. Anyway, another thing you should look at is the user friendliness. Especially as a beginner, it's important that it's easy for you to start. So before opening an account, check their website or their app to see if you like the design and can use it easily. Now, the third and also most important factor is the cost. For every broker out there, there will be fees and commissions, and since they can vary a lot, it's really a good time investment to take a closer look at them. Because at the end of the day, the cost you pay at the broker also diminishes your returns. When it comes to fees, I think there are 2 kinds of fees that are especially important to look at, and that is the account maintenance fee. So sometimes they charge you something monthly or also yearly just for having an account at that broker. And that I think is something you should try to avoid, because there are a lot of brokers out there that don't have these fees. And you should also look out for a negative interest rate. I don't think this is going to be a problem now in 2023 because the key interest rates are rising, but during the last 10 to 15 years, the key interest rate was quite low. Then some brokers would charge you money just for having money in your investment account that has not been invested yet into some kind of asset. The second type of fees are trading fees. Those, to be honest, are pretty normal. Trading fees in the past few years have declined significantly. The best option, of course, is to have no fee at all. Just know that in some cases it will be just normal to have them. Some brokers will, for example, not have a fee for buying stocks or for buying ETFs, but then will have a fee, for example, for buying options. Then there can be flat fees, for example, a fixed fixed sum for every trade. Then there can also be a commission where you pay a certain percentage from the whole amount of your order. So if you plan on large orders over several thousands of dollars, the flat fee is going to be the better version. If you plan to invest smaller amounts like less than 100 or several hundred, the commission might be the better option. So to choose the best version for you, you could run some numbers. And then there will be other fees and commissions that will depend on your personal situation. For example, an inactivity fee. So when you already know that you're going to invest regularly, you don't need to pay attention to this. If you only plan to invest occasionally, that might be a relevant factor. Then there can also be transfer or closure fees. So if you plan on switching brokers often, that is something you should look out for. And the last factor is availability. So this for one is of course if the broker is actually available in your country, because oftentimes brokers are tied to a specific nationality or residence. Another one goes for the investment options. So ideally you have picked your investment strategy already beforehand, and then you can look if the specific products are available at the broker you want to start an account, and ideally free of charge. And availability for your special needs can also, for example, mean an account minimum. For example, if the broker wants you to invest at least $5,000 at the start, but you haven't saved that much up yet, maybe you should start with a different one. And another thing that I want you to look out for is to not get allured by one-time offers from specific brokers. For example, the first 5 trades are free or you get free stock. Go through the list we discussed in this video first and decide apart from that offer if you would still like to open an account, and then of course you can go for it. When you haven't picked an investment strategy yet, I've linked a video for you here. Thank you for watching and I hopefully see you in the next video. Bye bye.